Technology discussion here. Today we talk about control, security and audit. Areas that we are planning to discuss and cover: internal controls, framework of control, types of control, control procedures, internal audit and internal control, systems audit, external audit, IT system security and safety, integrity, input control, data validation controls, processing controls, output controls, backup controls and archiving.
The last page is point chapter. The last page is on the chapter full of question. Past paper statement.
We did the question for
Question marks. Yeah.
We did this. So the syllabus area: internal control systems, internal control environment, internal audit and internal control, external audit. Then the last three sections is more of a what you call IT. Actually, fintech is a now big demanding area. If someone knows fintech very well, they can learn a lot. It's something similar to I don't know, you all heard about this Excel. In Excel there is one advanced
Power BI.
Power BI, exactly. That's what I'm supposed to say.
Presentation is
So it has a big
impact, and it's like similar ERP program.
yeah, but using spreadsheets.
Spreadsheet. Immediate update.
Fintech also same.
Dashboard is there.
Yeah. So internal control. What is internal control? Now why we need internal control? So how we can interpret internal control? Why? For example, when you are going out of your home, you lock your house and then you come and open and see whether the house is closed or not. That is internal control. Not only that you are closing the door, you are making sure door is in fact closed. So it is to counter the risk. Why we need to have internal controls? In order to counter any possible risk. You are driving, you are wearing seatbelt is one internal control. Making sure you have the driving license, one internal control. Like that. Second, maintain the high quality of reporting information. Now, when you prepare financial statement, the way you prepare the financial statement, if that is inbuilt with internal controls, that prepared financial statement will be more high quality. So, comply with laws and regulations. You will comply with the, for example, for me to say, when you are in the plant, you have one internal control. Every individual must wear helmet, goggles, and the coverall, and all safety wear. So that is your company internal control, but that also country's law. So by setting up your internal control, you are also complying with the prevailing country's laws and regulations. Provide reasonable assurance that the organization will fulfill its objectives. Now here important point is that reasonable assurance. You cannot have absolute or total assurance. You can only have a reasonable assurance. Framework of control. First of all, control environment, culture. Now, if you talk about like some family, especially during this Corona time, some family it's very strict in mask, in entertaining us. I know one of my friends. He used to live in Saudi. He came to Sri Lanka and then he became my business partner. So we needed to meet time to time. and we had to meet for a business meeting. After we one day we talked over the phone, we agreed a time after 3 months. He was not allowed to go out of the home for that 3 months because of this pandemic. So their culture is like that. You know, the house that he is living, the culture there is like that. But some other houses, they don't care. Personally, if you ask me, I don't care, to be honest. So it's a matter of what culture in which your organization is in. Some culture, some organization, they don't pay serious importance to the high level of internal controls. Whereas some organization, they are very strict in this. That is first is culture. Second, control procedures, whether it is written or not, whether is it in practice or not. So you should have it's always better to have a written procedure. The control procedures must be written. So then it is easy to manage and control. I know one organization, it's a multi-billion project company. Now they are seriously struggling between the partners, simply because nothing is in informal or invited. So every single thing they pick, they have disputes. So
Is it boom?
boom is one
One
example.
Because I am there now.
Yeah, boom is one example, but that is in Doha. The one that I am talking is not is much bigger than boom. Multi-billion, several billion projects internationally. So process monitoring their continual effectiveness. So you have before that, information and communication process. Now you should have a better dissemination process. Your reports, your outcomes, your outputs should be circulated within your team.
Having monthly meetings.
Exactly, monthly meeting, monthly reporting, through email, through bulletins, through the wallpaper, what do you call that, this
Board there is a board.
yeah, what do you call that?
Performance science.
In the office,
Sales one of-
sometimes they notice board.
Notice board.
So you put some news in the notice board, WhatsApp, different efficient way of communicating it. Process monitoring their continual effectiveness. So this is internal audit.
Yes, I received last Thursday regarding this heat. Those are from our HR department. Be careful with the perfumes you give.
Yes.
It's an internal control.
Exactly. Limitation. Now inherent. Now this word inherent, what is the meaning? You know or you don't?
Inbuilt by nature it is.
Exactly. It is something that we cannot do anything. This temperature outside, I cannot control that. When we setting up internal control, we also face certain limitations. So one of the limitation is the benefit. Let's say, for example, my benefit is $1 million, but I may have to pay $1.5 million. Then is it useful for me to have that? No. Always we need to make sure the benefit is exceeding the cost. So if the cost is exceeding benefit, then no point of that internal control. So that is one limitation. Potential for fraud or human error. However much you introduce control, you have internal audit, everything, if you have a crooked-minded person inside the company, he will know how to penetrate. And then he will bypass everything. Employee collusion. What is collusion? Sales?
Right?
No, it's not actually fight. Hmm? Sometimes it's not disagreeing also.
Coercion. A group of it, a group of something.
See? Cooperation. But secret or illegal cooperation.
That is coalition? Coalition is
Coalition is something else.
about
Coalition is like a team. Spelling for coalition is this no. As you said. So now, what is collusion is sales department one man, okay, stores department one man. They become friends, and what they do, they sell things without having the books. Recently, I can give you one example locally in Qatar. One food supply company supplying chicken to catering companies. Now this food supply company have many different customers now. So catering company customers are little bit large, big. So warehouse, vehicle, driver and the catering company. So warehouse there is one man. And the man who is loading the vehicle, one man. And the man who driving is there, and the man who downloading the things from that company, they all become one team. So then what they started doing, they sold these items without invoice, and they collected the cash personally. Unfortunately, all of them are Sri Lankans. All of them are Udatalavan people. And finally they got around 2.5 million riyals. No amount of fraud.
The company they're lost in.
See, there is one what do you call that, van helper who is having in his village KDH 2 vehicles. Abadi our lifestyle are totally different. So
Because of no internal controls.
This is why they don't hire family people, husband and wife in companies.
Correct. So collusion is one risk. Employee collusion. Bypassing or overriding of controls by management. You as accountant, you introduce control. Me as the CEO, I say Kalivali. You tell me that every payment, finance manager must sign. I am the CEO, I need some 10,000 riyal, and the finance manager not around. I am saying, what nonsense. I don't care, give me the money. So that is overriding controls by management. So there are controls can be control philosophy, management style, strategy, culture, ethical principles, and also you should have control to prevent, detect and correct.
Is there anything wrong? Divided into two, both
No, forget about the terms there. So one is talking about the environmental types, other one in the control environment how to use the controls. So the control environment can, the controls can be for philosophy. Due to the philosophy you will have controls. Management style can introduce controls. Strategy of the business can require controls. Culture, because of the culture you may need controls, and because of the ethical principles also you may need controls. Furthermore, what are the ways in which you will use the controls to prevent, to detect and to correct? Prevention is better than cure. So, elements of a strong control environment. There would be clear strategies for dealing with significant risk identified. If someone is stealing, you don't entertain him. You simply no mercy. You terminate him, you send to jail, you take action, you take disciplinary steps and all that. The company's culture, code of conduct. You know what the code of conduct is? every year, if the company is a reasonably big company, they will have a document which to be signed by the employees.
Employees.
Yeah.
How to behave, how to do.
How exactly? For example, not to engage competing businesses, for example.
Ah, yes.
Like that, there will be so many different clauses. So, and you should have better HR policies and performance reward system. So, if you have a performance reward system, employees will not involve into such type of frauds.
They try to perform good.
Better, to the right way to the company. Then, and risk management and internal control system. Senior management commitment, fostering climate of trust. That's important. If I am the CEO and you are my staff, if I am cherry picking behind you, I am sending you to a sales meeting and I am coming behind in my car and checking where are you going. If I do that, you cannot work well. I should have a trust on you, so I must foster climate of trust. Communication to employees of what is expected of them and their freedom to act. You have to be very clear with what I am needing from you. And you should monitor on a regular basis and then let you to perform. I make you freedom. You do your work in the right way as what I expected. People having knowledge, skills and tools to support achievements of organizations. Okay, there is, see, these are the 8 different types of control procedures, right? Segregation of duties, what do you mean by that?
Dividing the duties.
Yeah, meaning not allowing one person to do the entire part of the job. For example, cash collection. You receive the cash, you put the cash in the drawer, you issue receipt, you take the cash, you go to bank, you deposit. This is not correct. So there should be separate people involved in that process. Physical, like closing the doors, having security guards, CCTV controls, and electronic gates, like that. Accounting controls, that everyone understands. Management, senior management, how there's a board of management, then the organization chart, and then timely reporting, monitoring, and then also on regular meetings, and so on. Supervision. You always allow someone to supervise someone's work. Organization structure. That's the only chart what I'm talking about. We talked about different types of structure, in Charles Anthony's structure and all that. Authorization and approval. Every transaction must be taken place through a proper authorization and approval. And finally, personal control. HR, recruitment, and right person is involved in the right job, and so on. Classification of control procedures, administration, accounting, and detect, correct. Administration, concerned with achieving objectives and implementing policies. Controls relate to channels of communication and reporting responsibilities. Accounting, provide accurate accounting records and achieve accountability, meaning that responsibility. Apply to recording transaction and establishing responsibilities for records, transaction and assets. Detect, designed to detect errors. Example, bank reconciliation. If you do bank reconciliation, you may find out whether there are frauds. Correct, designed to minimize and negate the effects of errors. Example, computer backup, and at the end of the day, every day you take a computer backup. If you do that, next day, for example, if you, there is a, what we call, corrupt in your data, you can always correct by taking the last day's backup. Internal audit and internal audit is a part of internal control system which assesses the effectiveness of other control. Now, for example, when you talk about audit, there are two types of audit. External audit and internal audit. External audit is just to express an opinion. Express an opinion. Whereas internal audit is something like a management job. Same like accountant, same like sales manager. You are the internal auditor whose job is to work on the risk and enhance values. So we call it risk-based auditing. Understood? So when you talk about risk, there is something called risk framework. In that first is appetite. Spelling is correct? Appetite. So what is appetite is, let's say we four of us going to a restaurant and you can eat only one plate.
Appetite.
Appetite, yes.
Tea.
This is tea.
Appetite.
Yeah. So you go to a restaurant and you can eat only one plate, but I can eat 3 plates and he can eat 2 plates. He can eat half plates. So that's the now when I am eating 3 plates doesn't mean I am eating too much, because my body structure is like that. Understand? So in business, when you talk about risk, first thing is the risk appetite we have to look for. If it's a grocery, losing 500 riyal is a very big problem for them. But if it's a UDC company, losing 500 riyal is nothing for them. Understand? So first is find out the risk. Then the next is you then have to set up. You need to define the risk. Define what type of risk. You have business risk and also you have there are 3 different audit systems there, which you call inherent risk, detection risk and control risk. So like that you will work out on this. And then you have something called risk management. So risk management is how you are going to manage your risk. There are 4 methods: accept, avoid, mitigate and transfer. One is accept, meaning you have no choice, you simply have to accept. We may die one day. Today, after 50 years, after 2 days, after, we don't know, but we may die. Can we do anything? So, we accept. Number 2, avoid. I am very afraid to driving cars. So, I don't want to take a driving license. Or I am afraid of using escalators. So, I always go in the steps. So, I avoid. Mitigate. When you drive in the car, you wear seat belt, you check the fuel, you check the air of the tire, you also check the driving license, istimara, everything. You minimize different possibilities of risk. Transfer. What is transfer? You take insurance.
Answer the risk to another.
You transfer the what you call implication of the risk to someone else. So, internal audit works depends on the scope and priority of the identified, because I said to you it's a risk-based audit. They may have to conduct a risk assessment, obviously. Need to find out what is the level of the risk in the company, and which they will recommend an appropriate framework. Key features of internal audit: independence. What do you mean by independence? Now, if you talk about external auditor and internal auditor, external auditor is completely independent. Internal auditor partially independent. Because internal auditor is an employee of the organization. So he has to report to the management, top management, board of directors. Whereas external auditor is not an employee of the company. He has been appointed by the shareholders. So he will report to shareholders. So internal auditors will be having a very limited independence from whom they are reviewing. For example, I am internal auditor. I have been hired by the board of directors. I am auditor of human resource. So I will be totally have to be independent from the HR department. That's it. Should not go to lunch together. Should not be meeting after office hours. Must not be having WhatsApp communication that will listen to them. Appraisal, they review work rather than doing it. So the internal auditors, they don't go and sit and do double entries. They check the double entries, what someone else has done.
How it has been.
Work of internal audit department, review systems of accounting and internal control. That's what I told you. Examination of information, both financial and operating. Review of economy, efficiency and effectiveness of the operation. We discussed about these three terms, right? Economy, efficiency and that we talk about the constructing well. Remember, no? So review of compliance, review of safeguarding of assets, review of implementation of corporate objectives, identification of significant business risk, monitoring overall risk management policy and monitoring risk management strategies, and finally, sometimes special investigations. So, under internal audit, you will have different this type of audits: operational audit, monitor management performance, and sometimes known as management efficiency or VFM, value for money. When you see the word VFM, value for money, then please remember this performs three E's. We call it 3 E's: efficiency, effectiveness and economy. So the audit on efficiency, audit on economy, audit on effectiveness. Systems, test and evaluate internal controls. For example, if you introduce a system saying that every sales should be supported with a sales order, for example, then when you are doing the system audit, what you should do is you should pick samples of sales and then check whether that has been supported with the sales order. Transaction audit aims to detect fraud and uses only substantive tests. When you talk about tests, there are two types of tests. Control test or test of controls and substantive test. So what do you mean by control test is that, and before you really start the complete audit, you just simply check, taking one sample, how the transaction is based on the controls or not. You just check whether the control is effective or not. Is it in place or not? Example, if I want to say, receiving inventories to a warehouse. So there should be a delivery note, the physical items should come, security guard must come, the storekeeper should be there, he should check all the items along with the delivery note and the purchase order, and then he should issue a goods received note, and then he should receive these things into the warehouse. So this is what he is supposed to do. So when you do a control test, you pick only one sample.
Randomly you take one.
Yeah, you pick only one sample randomly, and then you are finding out whether all these steps are fulfilled or not. We call it walk-through test. Walk through. And we also say that it is what do you call that? Kernel, protein kernel. You know this baby that small cradle. This one to grade. We use this jargon.
Tortil Sudugadana.
Yes. You do the complete flow of the test
Start when?
for one transaction, and that is walkthrough test, part of control test. When you are satisfied with your control test, then your amount of risk is less. If the amount of risk is less, your substantive test will be less. The control test satisfaction is high. Then risk is low. That means substantive test what do you mean by substantive test? Doing testing detail, complete, full. There are two types of substantive test. Test of transactions, test of balances. In other words, P&L audit and balance sheet audit. Okay? So, social audits and also management investigations. Systems audit compliant, are the controls implied as intended, do a walkthrough. There are any errors or omission, test the sample. It is vital that the independent inter-auditor is and is seen to be independent. These two words are very important. Is and seen to be.
Which is already independent, is seen to be means is acting as well.
I will give you an example. Let's say I am now internal auditor for Qatar Airways, for example. I am then the board of directors appointed me to do the audit of Qatar Airways Mansula branch. So I must be independent. And what we mean by seen to be independent is that I must not have any indication to outsider if they see me that I am not independent. For example, as I told you earlier, the Mansura branch manager and myself are roommates. Or we are going to the restaurant, or we are going to club, or we are going to play cricket, or we are going to watch movies. All the work I am with them only. Then it is not I am seen to be independent. Tamil சொல்லுவோமே பணமரத்துக்கடியிலிருந்து பாலை குடிச்சாலும் தாராயம் சொல்லுவோம். So you should maintain your dignity in terms of your independence against your clientele. So that's what they are saying. This can be challenged as they are also employees of the company, obviously. Independence is established by the responsibility structure. They report direct to audit committee. Audit committee is the topmost reporting body in the company. The auditor's own approach. See, if I am an auditor, I should do the work as like I know or I wanted to. I should not listen to you. The auditor's mandatory authority should not implement new controls or procedure. There is something called audit charter. A document written by the auditors and what to do when they are doing audit. So they should follow that. So you don't need to introduce new things just to convince and make people happy. Internal audit department plays a significant part in an organization risk management process, obviously. External audit is the regular examination of the organization records by an independent outside party to ensure that they have been properly maintained and give, see, this word is very important, a true and fair view. Whenever you talk about external audit, please include this word, then you will get marks. True and fair view of the entity's financial state. So, how I define external audit? Express an opinion whether the financial statement is providing a true and a fair view. If you say that, that is external audit. Differences between internal audit and external audit. To whom you are reporting? Internal audit you will report to board of directors. External audit, shareholders. Reason, add value and improve organization operations. Whereas external audit express an opinion on the financial statement, work relating to operations of the organization. Here, on the financial statements, relationship with the company, employees of the company, independent of the companies and its management. Coordination. There needs to be a coordination between external and internal auditors to ensure that duplication of work is minimized. Sometimes, for example, if I am the external auditor, I wanted to do a test on sales, and you are the internal auditor, already you have done a huge test on sales. So then, there is a chance that I can depend and rely on your work. But I cannot rely this blindly. Before I rely, I should have a satisfaction that you are a good internal auditor. You know what you are supposed to do. If the external auditor can rely to an extent on the work of the internal audit department, they will have to do less testing themselves. To make this judgment, they need to consider organizational status, scope of internal audit function, technical competence. In a company, the guy works as an internal auditor, he is not a professionally qualified person. Then you cannot really rely on and due professional care. So you should have all this. Objectives of internal control system. What are the objectives? To enable management to carry on the business of enterprise in an orderly and efficient manner. To satisfy management that their policies are being adhered to. To ensure that assets of the company are safeguarded. See, for companies, assets are most important. So, as part of internal audit, you should always ensure that you are ensuring that. To ensure as far as possible that enterprise maintains complete and accurate records of the business. Now, it's little slightly different. IT systems, security and safety. It is important that IT systems secure and protect the data and the information that they process and store. Security can be classified as security for prevention, security for detection, security for deterrence. Two different terms. You know the difference between these two? Detection is, I think, slightly related. Let's see. Action of discouraging an action or even through instilling doubt or fear of consequences. See? It's like how I will explain. US has lot of nuclear power. Now I am another country. If I am angry with them, if I am thinking of attacking them, I will not do that because I know that they have already strong base. So this is sort of a deterrence. So if I think that I want to fight with somebody and that man is tall and built and all that, and I am a small young shady fellow, I will not think of fighting him. So this is a deterrence. Whereas other word is detection, is finding out. Recovery procedures, correction procedures, and threat avoidance. To make sure that no danger comes to you. So you minimize that. So these are part of security and safety for IT system that will be needed. Physical threat to security could be natural or man-made. There's someone called disgruntled employee. Who is disgruntled employee? You know that? You know employees, right? This disgruntled, let's say for example, I have terminated you. And now you are under notice. Within 2 weeks you have to go. So now you are very angry with the company or not angry with the company. You are a disgruntled employee. And if you are a disgruntled employee and you have access to system and everything, then if there is a chance that you can damage this?
Yeah.
Obviously. So that is what? Man-made. They can damage the system. They include fire, flooding, weather, lightning, terrorist activity or accidental damage. Physical access controls. Seek to prevent intruders accessing the IT system. Who is intruders?
Who are not authorized persons.
Exactly. Who are strangers in a sense.
Yes.
So you should not allow them unnecessarily. Security staff, door locks, keypads for car entry system, intruder alarms, and also you can keep bulldog. Bulldog also prevent. You will take a half a kilo of the meat, then finish. So these are physical access control. Theft. Computer theft is an increasing problem as equipment becomes smaller and more portable. Hard disk, USB, what do you call that, stick, can be stolen as you like. The loss of physical assets is a concern, but the loss of the data stored on the computer may cause a bigger problem. Risk to data, human error. Technical errors such as malfunctioning hardware or software. Natural disasters. Fraud. Commercial espionage. What is that? Espionage.
Working against the company.
Working against?
Okay.
Not only accountants. The practice of spying or of using spies, typically of governments to obtain political and military information. Agent, the
Spy.
spy material. So commercial espionage is to get business benefits.
That means it's outside the organization.